Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so packed it's like trying to fit an entire global market into a single document. And you know what happens when you try to squish things together. Stay tuned to find out. This report is from Vanguard International Equity Index Funds, and it's a certified shareholder report, meaning it gives us a peek into how they're managing their investments in emerging markets. We'll break down what it all means for your money. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. All right, let's open this up. This is a Form N-CSR, which is basically a shareholder report for registered investment companies. It's like a report card telling investors how their money is doing. This one covers November 1, 2024 to April 30, 2025. It includes the financial results for several funds. The key thing is understanding if these funds are growing and managing risk effectively. You can see Vanguard International Equity Index Funds based out of Valley Forge, PA is the filer. The report covers Vanguard Emerging Markets Stock Index Fund and its different share classes: investor shares, ETF shares, Admiral shares, institutional shares, and institutional shares, and institutional shares, and institutional plus shares. Each share class has its own perks, and it's vital to know what is happening on all of them. The table of contents shows that we're dealing with mainly the Vanguard Emerging Market Stock Index Fund, but it's broken down into different share classes like investor shares, FTSE Emerging Markets ETF shares, Admiral shares, and so on. It's like having different levels of membership to the same club, each with its own set of fees and benefits. So basically, the overview says we're getting a health check for a fund that invests in developing countries like Brazil, China, and India. It looks like the fund offers different flavors of investment options, each aiming for the same market but with different fee structures. Now let's jump right into what everyone likes to know: costs for invested shares. A hypothetical $10,000 investment would cost you $14 or 0.29%. Now compare that, on the other hand, to the FTSE Emerging Markets ETF shares, where the costs are only $4 for the same investment. That's zero investing your own money versus using a fund. Depending on which type of fund you're in, you might be paying more than 3x. Obviously, Vanguard would like to incentivize you to use the lower cost funds to make more money on them over time. The biggest stat here is the fund's net assets, which is over 112 billion. They've got almost 6,000 holdings, which means the portfolio is pretty diversified. Diversified is when lots of items are in the portfolio instead of a few. The amount of churn, how often they buy and sell, is at 3%. This means that management holds for about 30 months each item they buy. It's considered a low turnover. Warren Buffett would be happy with this. Looking at the portfolio composition, we see that most of the investments are in Asia, making up 86.8% of the portfolio. Africa is under 4% and Europe around 1.4%. Make the call yourself if it's a good weighting, but now you can see how the fund is doing what it's supposed to. Okay, let's go to the good stuff. Item 7. Financial statements and financial highlights for open-end management investment companies. This is where we scrutinize the real financials. Let's dive into the schedule of investments. Brazil takes up the biggest chunk of investments in the portfolio allocation, with Bale SA and Petróleo Brasileiro SA having considerable investment. It's good to see the investments actually have a purpose and use. China comprises 31.2% of the portfolio. Their biggest bets seem to be on Tencent and Alibaba, way up in the millions, so basically following the common formula on investing in large tech. China Construction Bank and Xiaomi are also big players. What's really happening here is the bet isn't on China per se, but it's tech behemoths. Moving over to South Korea, we see the big names dominating their investment choices. Samsung is huge with $1.1 billion, followed by SK Hynix at around $500 million. After that is Pasco, another massive firm with almost $250 million invested. Looks like the bet there is very, very tech focused. Scrolling down, that looks like most of the companies in the filing are very small companies. 5,000 shares are lower. So let's jump to the statement of assets and liabilities to see if our investments paid off. The total net assets were a whopping 112 billion at the end of April. There are about 2 billion shares outstanding. For institutional level shares that people use to manage their retirement, the cost is about $28 each. Going to the statement of operations, the total income was about 1.2 billion and expenses were at about 47 million. This leaves a net investment income of 1.2 billion. Nice. Obviously they know what they are doing in the industry because there was negative 770 million of realized net loss. They must be taking steps in order to compensate by buying other companies. Here they show a net increase and decrease where they put money in or take investments out. That's to compare with the previous year. And as you can see here, some years it's good, others it's bad. So we should really try and find out by what metric did the company decide it was a good investment. Item 16 goes into controls and procedures to have their CFOs say that their rules and procedures are effective and in top shape. And there were no funny stuff that happened during the last 6 months. Internal control over financial reporting basically just means they didn't have any changes to their financial practices that would screw things up, so it's quite normal. And lastly, the important sign off. Notice all of the important people that signed off. This is like the final exam, so it's a relief to see it. All right, that's Vanguard's Emerging Market Stock Index Fund in a nutshell. So is Vanguard a well-oiled machine? Here's my takes. First, they are one of the behemoths on Wall Street for good reason and do stick to a well-diversified investment. That said, you depend on their expertise on picking the right stocks on the correct ratio. Second, their fees are very low, so you don't end up paying a big portion on the transaction or maintenance. But you do have to realize you can manage your own money if you take the time. Are you betting on this guy doing a better job than you? Second, their fees are very low, so you don't end up paying a big portion on the transaction or maintenance. But you do have to realize you can manage your own money if you take the time. Are you betting on this guy doing a better job than you? It seems to me, as always, that you need to evaluate your skill, available time for management, and if this is something you see that can profit you as well. Otherwise, if it's for your retirement, it has been proven that low interest broad strokes do work better than trying to strike gold. For most people, these funds are better than picking stocks randomly at Wall Street bets. All in all, I think Vanguard is doing what it is supposed to do, and there is little to no change here. What do you think about Vanguard's fund and where emerging markets are headed? Drop your thoughts below. If this analysis helped, hit that like button and subscribe for more. Also, don't forget to check out the Discord server in the description below for awesome content like this. Thanks for watching, and I'll catch you in the next video.